Hello everyone, great to have your company on Kalkine TV. I'm Sage and you're watching the Buzzing Trends, and today we'll be covering 7 ASX companies that declared better dividends in 2021. A company offering an increased dividend always attracts investors, and an increase in the dividend indicates an increase in the cash flows. Thus, it gives a positive impression about the company concerning its performance. And on that note, let us look at 7 ASX stocks that offered increased dividends in 2021. Firstly, Bhp Group produces essential commodities through its assets involving iron ore, copper, nickel, metallurgical coal, potash and petroleum. In financial year 2021, the company delivered a strong result with a 42% growth in revenue. It offered a fully franked interim dividend of US 101 cents and a final dividend of US 200 cents. In the September 2021 quarter, BHP delivered reliable operational performance. It executed a series of strategic major maintenance activities across its assets. It announced an agreement to pursue a proposed merger of its petroleum business with Woodside during this period. And at the company's annual general meeting on the 11th of November, the board addressed shareholders regarding climate change. It noted that strong progress had been made in meeting its commitment to trim its operational and value chain emissions. And at an estimated cost of US $2.4 billion, BHP established a pipeline of decarbonisation projects to decrease emissions by at least 30% by 2030. In comparison, Rio Tinto is targeting a more aggressive reduction, with emissions cut by 50% by the same date. And Fortescue Metals Group is aiming to achieve net zero emissions by 2030, the most ambitious goal between the trio. Next, we'll take a look at Rio Tinto. It produces iron ore, aluminium, copper, borates, titanium and diamonds, which are essential minerals for human progress. The company delivered record financial results and declared a total interim dividend of 561 US cents. And in the first half of financial year 2021, the company reported 143% growth in net cash generated from operating activities. In the September 2021 quarter, Rio Tinto made progress towards 4 pillars, and it continues to progress to make RIO, or Rio, stronger and become the best operator. Let's move on now. CSL is from the pharma, biotech and life sciences space. It focuses on rare and severe diseases and influenza vaccines. It is amongst the largest and fastest growing protein-based biotechnology companies. It is also the leading provider of in-licensed vaccines, and in financial year 2021 the company delivered strong results with a reported NPAT. The revenue improved by 10%, driven by critical operations maintained during the pandemic period, robust growth in its products and exceptionally strong performance in its influenza vaccines business, Seqirus. CSL announced a final dividend of US $1.18 per share. CSL used to be one of the most exciting blue chip shares on the S&P ASX 200 index. It gave investors mind-blowing returns for years, rising by more than 20% in 2017, 2018, 2019 and for the first 2 months of 2020. But a post-COVID world hasn't been too kind to CSL. And this ASX 200 healthcare giant last topped out at around $337 a share back in February 2020, a level we have yet to see reclaimed by CSL. And as it stands today, CSL is trading at $310.84 a share, up 1.1% so far. And at this share price, CSL is still around 7.6% off its all-time high, meaning the shares have gone backwards over the past 18 months or so. And now, before we take a look at more ASX companies that declared better dividends in 2021, let's take a small break. Stay with us.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With Kalkine TV.
Hello, welcome back. Great to have your company. Sage here. We're looking at ASX companies that declared better dividends in 2021. And Centro Group offers insurance, banking and wealth products and services via some of the most recognised financial brands in Australia and New Zealand. In financial year 2021, the company delivered strong financial results and announced a fully franked final dividend of 40 cents Australian per share. Other than this, the company also announced a fully franked special dividend of 8 cents Australian. And during the financial year 2021, Suncorp Group provided COVID-19 support to over 85,000 customers and contributed 9 million Australian dollars to several community programs. The company also noted an improvement in cash earnings driven by increased PAT in Australia and Suncorp Bank. Its profit in New Zealand dropped by 18.4% due to increased natural hazard costs. The Suncorp share price has come under pressure a few weeks back after following the lead of rival Insurance Australia Group by releasing an update on recent claims. This follows the hail and wind event which occurred on the 28th and 29th of October, impacting South Australia, Victoria and Tasmania. And according to the release as of 3rd November, Suncorp had received approximately 12,000 home and motor claims. However, as the full extent of damage is still unfolding, the company expects claims to rise further. And so much so, Suncorp is forecasting the total cost from the event to be in the range of $225 to $250 million. Next, we have Ramsey Healthcare, which is a global hospital group owning and operating a complete range of healthcare facilities across Australia, France, Indonesia, Malaysia and the UK. In financial year 2021, the company reported an increase of 142% in dividends to 151.5 cents Australian per share. And strong earnings growth was driven by solid growth in surgical admissions around its regions when lockdown restrictions were not in place. Last week, Australia's largest hospital operator announced its results for the 3 months to September. And revenue was up 1% to $3.2 billion, but operating profits were down 28% due to capacity restrictions on high-margin elective surgeries, as well as lockdowns throughout Sydney, Victoria and Western Australia. Centro Group owns and operates the preeminent living centre portfolio in Australia and New Zealand. It provided an interim dividend of 0.07 Australian dollars per share on the 31st of August 2021. And Centre announced its centres are continuing to perform consistently year to date. And for the 10-month period ending 31st October, the group collected $1.8 billion in gross rent from its customers. This is an increase of $187 million over the prior corresponding period, including the extensive lockdowns experienced. When government-mandated restrictions were lifted this year, each of the Australian states recorded a strong rebound in customer visits. Particularly New South Wales and Victoria witnessed an uptick during late October following successful COVID-19 vaccination programs. And lastly on the list today, Hifi is a specialty retailer of home consumer products. It focuses on consumer electronics, software, white goods, as well as appliances. In financial year 2021, JBH provided a total dividend of 287 cents Australian per share. Its total sales during the period improved by 12.6%. In the first quarter of financial year 2022, despite the interruption and variability to sales because of several state-based COVID-19 limitations, Hifi witnessed improvements in customer demand and robust sales growth rates over 2 years. But the news isn't quite as bad as it sounds, and Hifi Australia comp sales for first quarter were tracking down 7.9% below prior corresponding periods, but substantially above the pre-COVID levels of 17.3% on a 2-year basis. Importantly, comp sales have improved since the last update to 15th August, and Hifi Australian stores saw a 1.1% decline in sales in the second half of the quarter, and this compares with a close to 15% drop between 1st July to 15th August. So in conclusion, these players are known players from their respective industries and have a history of offering dividends. Thus, they create a positive impression about the businesses and the product and services they offer. And thank you for your company on that report. That's all for now. We will be back soon with our Buzzing Trends show to share the latest market insights with you. But till then, stay tuned with Kalkine TV for more of the stock, business and economy related hot trends. Sage signing off.